Okay. I said once we wait till 6 minutes past 1, or once it's 30 persons, once we have 30 persons, we can start. I think we have 30 persons already. So, good afternoon once again for those who are just joining us. You're welcome to today's edition of the Currency Power Strategy. We normally have our live active session every 2 o'clock with this link. But on Wednesdays and Thursdays, we start an hour early. I'll start an hour earlier, so we'll start by 1 p.m. On Wednesdays, we take between 1 p.m. to 2 p.m. to look at the currency market. And then on Thursdays, we take within 1 p.m. to 2 p.m. to look at the index market, okay? So that's why join me. So just understand that this link, this Zoom link that you currently have, that you used to join this meeting, is available for Monday to Fridays. In the morning by 8 a.m. In the morning by 8 a.m. we'll have classes. Then in the afternoon by 2 p.m. we also have classes. We have market analysis, mornings by 8 a.m. and by 2 p.m. in the afternoon. Okay, from Monday to Fridays. But for Wednesday and Thursdays, we start by 1 p.m. Okay, Wednesday and Thursdays, we start this afternoon class, we start by 1 p.m. Okay. So yes, what we are going to do, and today is going to be very interesting because a lot of the time I will take to explain a very very important data that will be coming out later today. If you do not know of fundamentals, then I'm glad you joined today, because today we are going to be looking at a very important fundamental that will be coming out by 7 p.m. We'll do that, and then we'll also look at taking some positions in the market by 2 p.m. or the afternoon session. Okay, and I want to take time to explain. First of all, I said I was going to ask for the sake of feedback. The last time we were here, last Wednesday we were here, I advised that people who were trading against the dollar, people who were trading dollar pairs, I advised that you should actually trade in favor of the dollar. What I said for last week Wednesday especially was that you could consider selling GBP USD, selling Euro USD, especially around resistance points. You know, we talked as we said that with the data that came out around last week, the CPI data that came out around last week, we expected that the dollar was going to gain strength, and so we advised that we should actually take advantage of the strength of the dollar to sell gold, sell indices, sell Euro USD, sell GBP USD, buy USD CAD, buy USD GPY, and all that. Okay, so we did like that, but I don't know. Was there anybody who through the week between that last Wednesday to now was able to take advantage of those sell entries around resistance points? Was there anybody who was able to benefit from the strength in the dollar from that last week? If the audio is not going well, I'm sure that it's a problem with your network, because I'm good here. So maybe it's network. So I was asking, is there anybody who was able to take advantage of the strength that we had in the dollar from last week to now? Anybody? Yes, I got some mails a while ago. I got some mails and said, okay, yeah, this is what is happening, this is what is happening to my account and all that. Okay, you did on Wednesday, that's fine. That's fine. Oh, that's good. That's good. So the thing is that, you know, with currencies, I'm glad that we're able to come up with a session like this, because like I said, by the time we started this class 2 weeks back, many persons trade currencies. And the truth is that, you know, if you could make money by trading indices, you know, which I like to do, but you could also make money by trading currencies. I've seen a lot of profitable people trading currencies. And if you're somebody who is trading indices before and you understand the risk involved, and you now go into currency trading, you find out that, you know, you're going to approach it with, it's just like somebody who has been fighting maybe heavyweight, and then is asked to fight maybe a lightweight. You understand? So the only thing for currency trading as we go along with all this is, to use a good lot size to make as much as possible. Okay. But yes, I'm glad for the feedback I've gotten. But let's look at what we have on our screen and how we expect it to affect the market. And for those who were not aware, last week we had a special training by our general manager on automated trading. How to use it, how to benefit from it. If you're not able to join that class, you can reach out to your account officers for the recorded session, okay? So that you can do it. He also gave an offer, and then he was saying that if you were able to fund your account with at least $1 million or $1,000, your account officer is going to connect you directly to him so that he can help with the setup, okay, of the automated trading, because you also need what we call a VP as well. And for those who do not really understand what I'm saying, there is a recorded version. You can actually use it, okay? So 50 EMA, yes, I've answered this question so many times. Yes. Let's talk about what we have on the screen. By 7 p.m. and it's really cool, we do not have any high impact news up until 7 p.m. By 7 p.m. we're going to be having federal funds rates, we're going to be having FOMC economic projections, we're going to be having FOMC statement, and by 7:30 we're going to have FOMC press conference. Okay, now also by 11:45 p.m. and please don't dull, by 11:45 p.m. we're going to be having a high impact news on NZD also. So something like NZD USD, NZD CAD, NZD JPY, those are instruments that will actually move around that time, and it will likely move into European session tomorrow. You understand? So this is quite good. Federal funds rate. I want to explain properly to us so that we know how to use it. That is how I like to do. Before fundamentals come out, I want to make sure that you understand what the fundamental is all about, so that you know what to do depending on how the data comes out. Okay, if you trade according to the data, there's a high chance that you can hold on that trade, even if maybe you're not in profit immediately. You understand? But let's continue. Federal funds rate. FOMC, you will notice that FOMC was mentioned 3 times here. FOMC was mentioned 3 times here. FOMC economic projection. The word itself, FOMC, stands for Federal Open Market Committee. Federal Open Market Committee. That's what FOMC stands for. And it's not just, FOMC is not particular to the US alone. Okay. Economists understand that there is something we call open market operation. For people who study economics, or we've come across it in the past. Open market operation, that's OMO. Okay. OMO. Wow, OMO. Yes. So open market operation is a situation whereby the government tries to control the economy. Government tries to control the economy at one point or the other to determine, because one thing is important, the circulation or the amount, the volume of money in the economy can go a long way to determine whether determine the strength or the weakness of that economy. Do you understand? They can do that. So the government tries as much as possible to make sure that they are controlling it with the use of open market operation. You understand? So if let me use an example. Let's say that there is a lot of money in circulation. Okay, there's a lot of money in circulation. Let's use that for an example. And the truth is that when there is too much money in circulation, the value of money drops. You understand? When there's too much money in circulation, the value of money drops. Okay, but if there are certain things that the government can do to help reduce the amount of money in circulation. Do you understand? If government finds out that the money in circulation is too much, there are some things they can do to reduce the money in circulation. If the government finds out that the money in circulation is not enough, there are things they can do to increase money in circulation. You understand? So that's how it works. That is how open market operation works. Okay. Now let's go to the US. Let me explain it from the US. Now, I'm sure that for people who have been joining this session, even the index market mastery, been joining it for the past couple of months, you must have heard me explain this quite a number of times. Okay. The US, from COVID 2020, that's where I want to start my story from. Okay. COVID 2020, there was general lockdown, global lockdown. And what that meant was industries were not producing, everybody was at home. Okay, everybody was at home, so factories were not producing, airlines were not operating. We did not have enough amount of goods. We did not have enough supply of goods. Okay, but something happened. Something happened. During that time, the government of the US and other developed nations decided that what they were going to do is that they were going to provide some level of help, financial help or financial aid, because they said, okay, these people are at home, they are not working. Okay, so let us put something for them. Let us give them something, stipends every month or thereabout, to ensure that they have they have something. Okay, so that means that the US citizens were getting money, but the truth is, at that point in time, production was not up. Like, people were not producing, so there was money, but they did not have too many goods. In fact, during one time in the year, especially when from COVID, we entered into Ukraine and Russia issue, and then there was issue with grains, and even in the US, they had problem with baby food. So that means people had money to buy baby food, but they did not have enough baby food. Okay, so what does that mean? Let me explain how that affects an economy. If you go to the market, okay, you go to the market and you see somebody who's selling something, you say he just gets to the market and then he brings out a bag of shoes and he says, shoe 15. What happens? People begin to rush him. 15, once in a lifetime opportunity. The truth is that as people begin to rush him, there's a high chance that he will likely increase the price, especially when he finds out that he does not have enough goods to meet the number of people that want from him. He will likely increase the price. So that's what happened in the US. People had a lot of money coming out of COVID, because even if they did not work, the government provided some level of help for them, but they did not have enough goods. So demand was higher than supply. People were requesting for more than what those companies could provide, because those companies were just returning back. And so what did that cause? That caused inflation. That meant that the price of goods began to rise. The price of goods began to rise. That caused what? That caused inflation. You understand? Here. So at the end of the day, if when things happen like that, when there is inflation like that, what does that mean? Price of goods begins to skyrocket. Price of goods begins to fly up. You understand? Begins to fly up because people cannot meet up with companies cannot meet up with what people are asking for. They can't meet up. So price begins to what? Skyrocket. That is what happened. That is what happened with the US. And that is why in the US, from COVID even till now, globally, because most of the things that happen to the US are things that actually happen to the world, because the US is the economy of the world. You understand? So globally, we had that inflation. So since that time, the US has been trying to combat that inflation. Okay, the reason for my story is that currently I just want you to know that the US is battling inflation. And one of the ways to battle inflation is by increasing interest rates. One of the ways to battle inflation is by increasing interest rates. Okay, now what does that mean? Let me explain. Remember, I've said that what is the problem? The problem is that there are a lot of money, but you don't have enough goods. Okay, there's a lot of money, but you don't have enough goods. Okay, so what the government wants to try to do is that, as production is increasing, let us try as much as possible to see if we can reduce the amount of money in circulation. Let's try and see if we can reduce the amount of money in circulation. And how did they do that? One of the ways by increasing interest rate, because when you increase interest rate, you make investment more juicy. When you increase interest rate, you make it possible for investors to what? To invest in the dollar, because interest rate is like the bonus you get from investing in the dollar or from saving in the dollar. So when the government increases interest rate, people want to hold more of the dollar because they know that if they hold the dollar for a particular period of time, they are going to get a higher interest on what they are holding. Do you understand? So you see why it is an effective way of handling inflation. Is an effective way of handling inflation, because at the end of the day, if you want there are other ways the government actually operates. Sometimes government also reduce, or they reduce lending ratio, so they reduce the amount that banks can lend to the public. What the government also do, sometimes they also sell bonds to the public, so that as people buy the bonds, they can take money from them, just to make sure that they are trying to reduce or control the amount of money in circulation. You understand? But that's the idea. That's what it's all about. So that is why for a while now, when CPI comes out, if CPI data comes out and the level of inflation is high, it will likely give strength to the dollar. Because investors will say, if this inflation is high, that means that I can buy the dollar. That means there's a high chance that the US government will increase interest rates. You understand? That's what it means. That means that, they will increase interest rates. That is how it works. That is how it works. And that is also how trading works. And that is how the US government, and that is why today FOMC is very, very important by 7 p.m. Please, as much as possible, try your best to trade FOMC. Let me explain how it's going to go. Now, last week, the US released CPI data. We were here and we traded it. Last week, the US released CPI data, and that CPI data measured inflation, and that CPI data came out higher than expected, which meant that there was increase in inflation in the US. Okay, please, I know that many of us are very more interested in, should we buy now, should we sell now? Okay, I know that's what many of us are more interested in. But the truth is that you will not always have somebody to tell you when to buy, when to sell. It's very good you know it for yourself. You understand? Some of us had to listen to some of these boring lectures at one point or the other. And now we can teach people and even make money just by teaching people, even without trading. You understand? So please listen. Now, FOMC today, if you check what you have on your screen today, you will see that we have what we call federal funds rates. That is the interest rates that they are going to be releasing today. Okay, they are going to be releasing interest rates today. And remember that last week, CPI data came out and it came out higher than expected. It came out higher than expected, which means that people are expecting that there's a high chance that they may increase interest rates today. And that is why you can see that the forecast is already at 5.5%. That means we are expecting, the forecast is that, it may be the same thing. But if the interest rate data comes out and it is higher than 5.5%, which is actually rare. I don't think they'll do that. But if it comes out and it comes out higher than 5.5%, trust me, there's going to be a massive strength in the dollar. If the data comes out by 7 p.m. today and it comes out higher than 5.5%, there is going to be a massive strength in the dollar, because it means that they have increased their interest rate. People want to invest in the dollar so that they can make a higher return, especially towards the end of the year. Please, if you understand this, let me tell you something. This data that is coming out, this federal funds rate, is the last time it's going to come out this year, because it comes out 4 times every year. Every quarter it comes out. Okay, so for October, November, December, the data that comes out today is likely going to tell what the dollar will do for the rest of the year. Sometimes you see some people towards December, they say, oh, I'm not trading again because there's no volatility. It's because they don't understand. People still trade and people still make money. So what I'm saying is that this data that's coming out today will likely give a longer direction to the market. And that's why most times, if you go and check back in history, most times, okay, because the government understands that towards the end of the year, there are 1 or 2 things. Government will try and maybe increase interest rate to make sure that they mop currencies from people. And that's why towards the end of the year, sometimes you will see stocks will be falling, gold will be falling, and all the likes. Dollar will be strong. You understand? So if this data comes out today and it comes out higher than 5.5%, there's a high chance that for the rest of the year, especially for the remaining days of this month into next month, there's going to be a strength in dollar. Except if it comes out lower than expected. That is when we might likely experience a weaker. But if it comes out the same, there's a high chance that it will still strengthen the dollar. Okay. Now, another thing I want you to understand is this. FOMC data coming out today is divided into 2 parts. There's a data that comes out by 7 p.m. and there is a press conference by 7:30 p.m. There is a data itself that comes out by 7 p.m. and there is a press conference that comes out by 7:30 p.m. I want to say this. Now, if you, by the time the 7 p.m. data comes out, you get the rate, you can trade very quickly with that rate. You can trade. If the rate comes out higher than expected, you can buy the dollar. That means you can sell GBP USD, you can sell Euro USD, you can sell gold, you can buy USD CAD, you can buy USD JPY, you can do those things. Okay, but by 7:30, what will happen? By 7:30, there's a high chance that the press conference begins. And when the press conference begins, the head of the FOMC, okay, will be speaking by that time. Okay, that time, there is likely now going to be towards that 7:30 to 8 p.m. Whatever move the market is doing around that 8 p.m., it will likely continue that move even for the rest of the day. You understand? So there's a high chance that 7 p.m. will be chaotic. But by that 7:30, the move will now be more streamlined. The move will now be more organized. In fact, sometimes when 7 p.m. data comes out, it can take dollar down. And when 7:30 starts, you will see dollar will now start to go up. So that's likely what will happen today. Okay, but this is what very important. Apart from the press conference, that data, anything that makes it to come out maybe 5.75%, come out 6% or whatever, which may be rare. But if it comes out higher than 5.5%, there's a high chance that the dollar is going to gain a lot of strength. Okay, there's a high chance it's going to gain a lot of strength. Now, if you cannot take advantage of that, you just wait for this 7:30. Okay, from 7:40, 7:45, whatever move the market is making, you can actually take advantage of that. Okay, let's move on now. We have analyzed FOMC data. Let us check the dollar index on the chart and let's see where it is. So, the truth is that some of these fundamentals sometimes, in fact, quite a number of time, technicals also follow them. Yes, technicals also follow them. So sometimes you will see, like, before the news comes out, maybe on the 5 minutes time frame or on the 1 hour time frame, you would have seen a candlestick pattern that even tells you what is coming out. If it comes out the same, it will likely still give strength to the dollar. But I don't expect that. If it comes out the same, the volatility might not be so high. So you might want to wait till that 7:30 to follow the move from the press conference. You understand? The best move, you'll be able to take a more I'll be more confident of a buy or a sell or whatever if the data comes out higher or lower. If it comes out higher, I want to buy the dollar. If it comes out lower, I want to sell the dollar. But if it comes out the same, I'll likely wait till 7:30 for the press conference. Okay, so let's check the chart. Okay, so we have the dollar index here. This is the dollar index chart, and this is it on the daily time frame. Now, what it has done on the daily time frame is that it has rested on a particular support on the daily time frame. The last time it was on this support, okay, the last time it got to this support was here, which is the 12th, which is the 12th. That I think that's last week, exactly last week, Tuesday, because this is 13th. This is where that dollar strength came out from. If you remember that day, for people that were here that day, when the data of CPI came out and we said it was going to give dollar strength, you know what happened? After the first push up, dollar started to come down. Pardon my grammar. Dollar started to come down. There are a lot of people in the comments were saying, why is dollar not strong now? You said dollar is going to be strong. Dollar is going to be strong. And we're saying that day that yes, we cannot really tell how fast the fundamental is going to move, but that the dollar will still, even when the market comes and the market will still move in line with that fundamental. And that's why the next day there was a very strong push in the market. You understand? So technically, the last time price was at this point, it was pushed back up by a fundamental. The last time price was around here, it was pushed back up by a fundamental, an inflation fundamental. Now price is here. Price has gotten to this place yesterday, giving us a hammer, closed as a hammer. Okay, which could actually be an indication that, no matter what happens, there's a high chance that dollar is likely going to gain strength again. Do you understand? That's what it is looking like. Of course, if you even check on the weekly time frame, there happens to be a verified resistance here. So the dollar index is at a point where you can really tell that there's going to be a move. You understand? The position where it is being on a support on the daily time frame and being around the resistance on the weekly time frame, you can tell that there's a high chance that there's going to be very good move. And that's what traders look out for. Traders just want to see volatility in the market. They just want to see volatility in the market. You understand? So that is what you want to look out for. Okay, that is what you want to look out for. So like we said, price has made a hammer. Let me zoom in. Okay. Yes, okay. Oh, sorry, I'm on the right chart. I thought I was on the wrong chart. So this is the dollar index. Like, remember we said around this place here we have a support here. So there's a high chance that whatever price is going to be doing, price is not really going to be able to break, because this hammer has already given us so there's a high chance that this data is going to be good for the dollar. But the thing with fundamentals is we have to get to that time, because it could be wrong. It could be wrong. But even if that first data weakens the dollar, I believe that press conference is going to give strength to the dollar. You understand? I believe it's going to give strength to the dollar. So if I were to prepare for that move, I will, let me mark this place and let's check on a smaller time frame. Good. Good. So you see this place like this that is called a proven support on one eye. See this place. I feel like dollar will likely get to this point, and then from this point here, we're gonna actually look out for a buy. Okay. So, but of course, we are going to make our move for the afternoon session and hold on for what FOMC is going to talk about. So I've explained FOMC, I've explained what we need to look out for when trading. Please, I want to move on to technical analysis on currencies. Does anybody have any question regarding what I explained with FOMC? Is there anybody, apart from people that will say, please, I'm just coming. I didn't come early. I'm talking about people who had me but have one or two questions. Please drop it on the chat. Let me wait for 1 minute. Okay. I literally said that. I literally said, any question apart from someone who would just say, I'm just coming. And the first thing I saw was, I'm just coming. Okay, well, this class is being recorded. We live streamed on YouTube. So you can join our YouTube this thing to go through it again. In general, is it a good idea to trade during a high impact news? Well, yes, it is. The truth is, of course, as time goes on, people develop styles. There are people who do not like to. But I just feel that it's just a matter of information. People who do not like to is because somehow maybe they're not able to, one or two experience have put them off. But the truth is that fundamental is that kind of market move that will just give you all what you have been trying to make in 2 months, can give you once. Of course, it can also rub the wrong way, of course. But the truth with fundamental is, if you understand what the fundamental is about, like the way we've taken our time to break down FOMC, the way we took our time to break down CPI last week, so if you understand what it's about, you can wait for the data, you can comfortably and confidently trade it, because the market is going to go in direction of that fundamental, especially something like FOMC. Is it better to set pending orders? What if the two triggers? Well, it sounds like you're answering your first question. Well, the truth is, another good way to trade fundamental is pending orders, actually. Like the data is coming out by the data is coming out by 7 p.m., right? So it's possible that maybe by 6:50 or by 6:59, it's possible that you could set your pending order. But when you want to do it, make sure that your buy stop and your sell stop are not too close. And that's in our advice. If you want to use pending order, which is not a bad idea, is to use trailing stop. Okay, so when you set a pending order, you can set a trailing stop of like maybe 5 pips. You understand? You can set a trailing stop, or maybe on currency, you can set a trailing stop of around 5 pips. Okay, if you are on an index, you can set a trailing stop of around maybe say you're on US on, you can set a trailing stop of around 10 pips or 20 pips, because that's tighter. So it's fine to use pending order, but I would always also advise that you use a trailing stop for the pending order. Then if the two of them triggers, then it means that you need to check the data. The data that came out is what will now determine which you will leave and which you will close. You understand? FOMC, that means FOMC has dual effect. But FOMC can have dual effect because apart from what the data says, by 7 p.m., by 7:30, there's going to be a press conference. And that press conference can actually, depending on what is said and what the body language of the person speaking are, that if that press conference can actually now have a negative impact, as based on that's looking at the opposite, the other one. Okay, so good. So you already have the link to watch the repeat broadcasts of the trainings and the analysis on YouTube. So yeah, you have the link. Okay. Hi, I discovered that when the start is released, before I place a trade, the chart would have jumped so far. That's true. That's very possible, especially depending on the kind of network that you use. Okay. For me, it's quite is I understand that point. I really understand that point. So that is why some people also use pending order and use trade and set trailing stop. Some people use pending order and set trailing stop. But it's good that when you're on a trade because of what you know, because of this social fact and that fact, instead of being on a trade just because the market is moving. You understand? So I'll still advise that if better still, you can maybe like me on my phone, I have a different screen. You understand? I have a monitor screen, so I can put my empty phone on that monitor screen, and I can check Forex Factory on the other laptop. Okay, so I can place my order button. I've already selected buy, or I've selected sell, or I'm ready to select buy or to select sell. So as the data comes, I can see it real time, I can place it, Even the FOMC, even Forex Factory will take, some seconds to reveal it. And there are people who, within those seconds, they already know what the market is likely doing. Okay. Hey, Prince, let's move on. Yes. Okay, I've explained this. Sometimes in FOMC trading, if the 7 p.m. buys, the 7:30 sells, what is the cost? Yes, because the 7 p.m. most times, most of that move would even happen before 7 p.m. Maybe let's say 6:58. 6:58, and then the move will just start. Now, sometimes most of that move is just because of sentiment, just initial reaction. Just like in the market, once you hear a gunshot, everybody starts running. That's initial reaction. But the press conference is now when the Fed chairman, Jerome Powell, and other people who have important roles within the US economy, that's when they are actually going to speak and address people. Okay, and from there you can now hear what their plans are, their long-term plans are, and all that. That's why sometimes it usually has an opposite effect. Okay, usually has an opposite effect, especially when the press conference starts. E.g. GBP news today. What should I do not to miss out before the stats are released? Well, if that's what the issue is, if you are really concerned about missing out before this, then you can use pending orders. You can try placing a buy stop and a sell stop. Look at the smaller time frame. Let it not be too close to price, but set your buy stop, set your sell stop, and use trailing stop. Okay. For some of us who are JJC, what should we do? You need to continue with your training, your basic training. I'm sure that if you do that within a week or so, you will, you'll get the hang of it. Or you can just continue joining this class. We're going to have tomorrow again by 1 p.m. on indices, okay? Then you can get okay, what's trailing stop? Trailing stop is a kind of stop loss that moves or follows price. It follows price to cover your profits. That's what trailing stop is. So when you place a trade, but trailing stop only works on the system, and it also works. It only works when you're online. Okay, it works when you're online.
Okay, if I am on a higher time frame, like 4 hours to get good entry, must I go to lower time frame? If you are there, if that is what you work with, that's what you where you get your analysis, then continue. You know, it's generally known that 1 hour is the best time frame, but the truth is that it's not the only time frame. Sometimes if we use different time frames, you know, and all that, I just feel like it's easier to look at the market on a higher time frame and take a position regarding what you have looked at. Take a position. So choose your entry on a smaller time frame. Does FOMC favor technical analysis? Well, it does sometimes, yeah, it does. The thing is that the market, general movement of the market is controlled by fundamental, but technical helps us to take advantage of it. Tells us where the closest resistance is, the support is, where retracement is, where reversal is, you know, like that. How do you set the trading stop? You need to have a system. It doesn't work on phone, and you need to be online. So once you have placed the trade, just right click on the trade, you see trailing stop. Once you select trailing stop, it will show you pips, number of that's by what distance do you want me to follow. So if you set 10 pips, it's in points. So if you put 100 points, that's 10 pips. So it will follow price at 10 pips. That's good. Oh, okay. I hope we get signals on time when it shows. What do you mean by signals? Are you talking about Forex Factory? Okay, I think I've been able to answer those questions. So what we'll do now is we will move to technical analysis on the various currencies. Okay, I'm going to do quite a number of non-US pairs. You know, I'm going to do quite a number of non-US pairs because most of the analysis on US pairs will likely be done towards the end of the day around FOMC. Okay, that's what I would advise. So I'm going to do instrument on, we are going to look at non-dollar instruments. Okay, so let's do this. So yes, remember that last week and week before last, we talked about the 50 EMA scalping strategy. The 50 EMA scalping strategy. So I'm still going to ask for feedback again. Some of us have used it, many have not. But for those of us that have used it, please let me get your feedback. For those of you that have used the 50 period EMA scalping strategy, please let me get your feedback. Okay. Claire have used it. So what's your feedback? Was it something that worked out? What are the challenges you had with it? Let me know, please, on the chat. And for those people who are not around last time, who are just coming, oh yeah, all of you, I'm going to drop my account number so that you can send your prayer points. Send your prayer point to my email address. No. I'll drop my account number. All of you send your prayer point to my account number so that I'm those people that were not around for the strategy, please account number will be passed around. Send your prayer point so that we can pray for me. Okay. The 50 EMA strategy is a very simple strategy, and it applies to okay, you have some challenge. Please, Felix, drop your challenge. What the challenge is. But let me explain. what it is just moving average period. Moving average indicator. For many of us professionals, we know, or people who have an idea of trading, you know what moving average is. Most professionals do not even like it because it's generally known as a lagging indicator. Okay. Yes, it's a lagging indicator. And apart from the fact that it's a lagging indicator, one of the problem people have it is that, it tells you about a move quite late. But the truth is, we found a way that you can actually benefit you, especially if you are a scalper. You can use it for scalping. And I also explained that you can use it on different time frames. It's just that if you use it on a smaller time frame, you will not need to wait for too long, or need to wait for as long as if you use it on a higher time frame. Okay, good. So let's do it. Let's look at the 50 EMA scalping strategy. First of all, you need to have the 50 period exponential moving average on your chart. So I'm going to come to indicators list. Okay. Under indicators list, I'll go to trend. If you're using your phone, once you tap the chart, a green ring will come out. Okay. So this moving average here, from this moving average, look at, is it that these people can't hear me? I'm already explaining it and I'm hearing how can I get the, that's what I'm explaining. So I selected, let me do it again. Go to indicators list, select trend. Once you select trend, you'll see moving average here. So you select moving average and look at the box it brought out. Look at the box it brought out. It will bring out a box where to ask you for the period, ask you for the shift, ask you for the MA method, ask you for the apply to. So for this moving average, I'll put 50 as a period. I'll put 50 period as a period. Then the shift, I'll put 1. You can use 0, it doesn't really matter, but just put 1 there. The MA method, I'll leave it at exponential. Okay. And then the apply to, I'll make it close. Apply to close, okay? So once I do it, I'll just select OK. Akiola, I understand that you don't understand it because it's your first time. You as a new member, just relax. This class holds regularly. You understand? So just relax. As you're going along with your basic training, time will come when you understand, and not very long. You understand? Even those all of us that are here, we joined not too long ago. Even me myself, I'm new. After all, the mercies of God are new every morning, so I'm new too. So just relax, you will get the hang of it, okay? So I have added the moving average to my chart. As you can see on my chart here, I have this red line. This red line on my chart is my moving average. Okay, so that's how to add a moving average. That's how to add. So I already saved it here. Good. So that's how to add it. You go to indicators list, you click on the you go to indicators list. When you go to indicators list, you go to trend. From trend, you select moving average. You put your period as 50. You put your shift as 1 or 0. You put your MA method. Let your MA method be exponential, and then you put your add to make it apply to close. Select close for the apply to option. Okay, so what it will do now is that it will help you to tell trend of the market. Now there are we have we have a litmus test for this. How do we know when to use this to buy or when to use this to sell? How do we know when to use this to buy I went to use this to sell. So what we do is that if it buys and it breaks, this is 15 minutes. So we're talking of the scalping strategy. If it buys and it breaks above the moving average. So if price breaks above or price closes above the 50 period moving average, that red line there, if price can break above it, okay, and the next candle is also bullish, price can break above it and the next candle is also bullish. Let me take it again. If price breaks above the moving average, I'm going to show us on the chart, of course, but if price breaks above the moving average, so let me continue. If price breaks above the moving average period, okay, once price breaks above it, and the next candle is also bullish, that is when we look out for a buy to the nearest resistance. You know, averagely, if price fulfills that condition, it should usually give us at least 7 to 10 pips in profit. Okay, but where you're considering is the nearest resistance. Okay, but if price breaks below it, and the next candle is bearish, then you should look out for a sell to the nearest support. You understand? That's how it works. That is exactly how it works. If price, so let me show us on the chart what I mean. So in this case here, like this is the last interaction with this, where price was able to break below it. This is what I mean. Like price was able to close below it. Okay, price was able to what? To close below it. And the next candle, you know, when this one finishes, this one will start forming. So if at the end of 15 minutes, remember this is on the 15 minutes time frame. So the first candle within 15 minutes closes, the second, every candle opens and closes within, 15 minutes. So if the first candle, this first candle closed below it, and the second candle also closed below it, from here, you can actually look out for a sell to the nearest support, or you can look out for at least 7 to 10 pips to sell. Okay, let me check it. So the time frame for the scalping strategy, you can use 5 minutes, you can use 15 minutes, but I always prepare 15 minutes. I prefer 15 minutes, okay? Well, if you come in and you see that you were late, price has fallen 4 to 5 consecutive candles, all you need to do is to check out where the closest support is, or you may just hold on and wait for price to go back towards the moving average to see what it does. If price goes back towards the moving average and breaks above it, gives you a consecutive bullish candle, you can buy. Okay, but if price breaks below it and gives you a consecutive bearish candle, you can also sell. I'm going to show us more examples where these things happen. Okay. Okay, please, if for example on 15 minutes time frame, I use my 50 EMA and I have 2 consecutive bullish and or bearish candles above or below, can I enter trade on my own and scalp? Yes, that's what all this talk is about. That's why I'm telling you that it should buy if you have 2 consecutive bullish candles above, and you should sell if you have 2 consecutive bearish candles below. For instance, look at this. I saw a good example just now. Yes, if you see, my cursor is around here. Let me use this crosshair so that you can see. My cursor is here. Okay, my cursor is here. This was yesterday around 4:15. Okay, this was yesterday around 4:15. So what happened? This bullish candle closed above
the moving average. You see it here, it's closed above the moving average. So that means that the next candle has to be bullish, but this one was bearish, so I'm not buying yet. See this one, closed below the moving average, but the next candle was not bearish. I'm not buying yet. You understand? So it's when you have two consecutive bullish candles like this one, 1, 2, two consecutive bullish candles above the moving average. Then you look out for a buy. Two consecutive bearish candles below the moving average, look out for a sell. Now, there are sometimes like this. Look at an example. In this example here, price was able to give us two consecutive bearish candles. Yeah, it gave us two consecutive bearish candles from here, but it was not able to. So let's say somehow you had already entered the sell here. That's why it's important to know when to come out of the trade. If I'm already on a sell and instead of the candle to go further to give me my profit, it decides to go up. Immediately it closes the first bullish candle above my moving average. I will close that sell and hold on. I'll close the sell and I will hold on. My screen is not showing. I think that's you. See, my screen is not showing. So if you check, it's something that especially with the index market, fast moving market, but you can also use it on currencies. Okay, once price breaks, once you have your moving average, your 50-period moving average, the first bullish candle break above it and the second candle is bullish, you can take advantage of it, buy from there. For currencies, you can target 7 to 10 pips. Okay, for currency, for indices, I always use money to calculate. As I say, if I do a 0.01, I should be, if I do a 0.05, for instance, I should be expecting at least for every 0.05 I do, I should be expecting at least a 10,000 naira profit. I should be expecting a 10,000 naira profit. If it closes now, remember that it has to close. So when you see when you see price on a moving average, wait for it to close. That's what to let you know whether it can break above it or not. That's what to make you know that you can break above it, that it can break above it or not. Wait for the candles to close before you determine whether it has broken it or not. It's not that the candle is going to be on the moving average, still moving, and you say, oh, it's already above it, and you go and buy. No, let it close above and let the next candle close and also be bullish. Then you can take advantage of it, buy in that market. Then when you have a bearish candle, okay, within that time frame, bearish candle, the next candle is also bearish below that moving average, you can take advantage of a sell. Okay, so yes, who's talking to me? So let's check. Let's begin to what does it mean that I should let the candle close? The candle should close. So if you're looking at the market on the 1 hour time frame, if you're looking at the market on the 1 hour time frame, that means that it takes each of those candlesticks, it takes them 1 hour for them to form. That's what it means. Each of those candlesticks takes them 1 hour for them to form. So that's why time frame is important. So like this now, if I put this in on 1 hour, it means that each of these candles take 1 hour to form. That's what it means. They all take one hour to form. So if you put it on 15 minutes, it means they all take 15 minutes to form. And that means that the 15 minutes should have expired before you can say this candle has broken above this. So at the close of that candle, within that 15 minutes, that candle's body has to form above that moving average.
Yeah, I wasn't the one that took the Bollinger, but yeah, the Bollinger strategy also works even on daily time. So that's why let me say something. Let me say something. You know, because we are talking about scalping, that is why we are using this strategy on a smaller time frame. You can actually use it for intraday trading, even on 1 hour. You find out that the dollar is still selling. Why is the dollar still selling? Because from here, dollar was able to do 2 consecutive bearish candle below the moving average and is selling the dollar further down. If you check here, we have 2 consecutive. Let me zoom in. You can see that even on 1 hour, it is there. Look at this first candle here, closed above the red moving average. The next candle closed above also and closed bullish. So that is a condition it has been. So we can place a buy here. Okay, we can place a buy. And then from here, price was able to make a push up about 9.9 pips or thereabout. You understand? So you need to have 2 consecutive bullish above the moving average to buy, or 2 consecutive garish, 2 consecutive bearish below the moving average for the market to sell. 1 hour is the best. There is any time frame to confirm close up. It doesn't have to be. There's 30 minutes also. There's daily, it all depends on which one you're more comfortable with. But we always say you want to do your analysis, if you are doing intraday, 1 hour is good. If you want to scalp 5 minutes, 15 minutes is good. Yeah, so that's it. So let's go in and analyze the market one by one. I've explained the moving average strategy to us. I've explained it to us. We now know how we can use it. It does not apply only to currency. It also applies to commodities. It also applies to indices. You understand? So you can try it out. I'm sure that it will really help. You understand? I'm sure it will really help. Okay, let's move on from there. Let's now look at instruments one by one and analyze what we're expecting for the 2:30 session today. Okay, so for 2:30 session today, how are we to trade the market? Okay, yes, also on indices. So for 2:30 session, how do we want to trade the market today? We're going to look at, remember I said that we're going to look at non-dollar pairs. We're going to look at non-dollar pairs, also dollar pairs because it's 2:30, that's what we're going to do. So are we ready? Yes, we are. Okay, let's go. We have looked at the dollar index and we've seen that the dollar index currently seems to be trading bearish. We looked at it on daily time frame. We noticed that it is headed back towards that support zone. Okay, support zone where on 1 hour it is known as a proven support. Good. Okay, so we said there's a high chance that the dollar will fall to this place and then pick back up. There's a high chance that the dollar might likely continue falling to this support point here, this strong support, and from there it will push up Oh, okay. Okay. So let's continue. So this is the dollar index. Currently, the dollar index is bearish. There's a high chance it's likely going to continue. Like I said, it's already approaching a support zone, which is a proven support around it. So there's a high chance that when the US session kicks up in the next 20 minutes, the dollar might likely still fall a bit more. The dollar might likely still fall a bit more. I feel like the dollar is just targeting this support zone. Okay. So dollar index will likely still fall to this place. And what does that mean? It means that it's very possible that something like US 100 pushes up during the US session. So, but let us look at the chart. Let's see what it's all about. Good. So you can see how the dollar index, just how US 100 has been buying, right? You can see how US 100 has actually been buying. Good. Now, how did that happen? Remember that we said this strategy, the 50 EMA strategy applies to, quite a lot of things. Look at it here. We had a bullish above, right? Above the 50 period, the first one, and then the second one, consecutive bullish candles, and from there a buy has been in order and price has actually been rising up. There's a high chance that price will likely continue like that up till later in the day when volatility will now reduce in anticipation for FOMC. But this is what I'm going to advise. If you check US 100, you find that US 100 is already approaching a strong resistance. US 100 is already approaching a strong resistance. This is where we have that strong resistance. Okay. Let's go backwards and see how strong that place is. Can you see? Follow the blue line. Follow the blue line where I marked the blue line. We want to see the dealings with that resistance. Okay. So you have here, around here, the price was rejected when price got here. Look at this one here. Around here, it was a support. It was also a support here. That same horizontal line stretching back was a support here. So it's a place that when price gets in contact with, price always, tends to reject. You understand? So that is what I would likely advise us to do for US 100 today. I'm going to mark that spot for US 100. Anything that makes US 100 to push up towards this place, we want to take advantage of a sell from there. Okay, want to take advantage of a sell from there. It's not now. It might close the gap, it may not. It's not really about gap trading, does not really have any technicality, but moreover, it has actually closed the gap. It gapped up and then it came down, and this bearish market has closed this gap. You understand here? So no, I can't call entry. I'm giving you zones. So that if at all, hey, I'm not going to give you entries, but I'm giving you zones, and this is the zone. If you look at the last place price was at, this was yesterday. Price went as high as 15,440, right? 15,440. So our resistance point is around that place. Our resistance point is from that 15,450. Our resistance point is around 15,450 to around 15,450 to around 20. Wait. 15,450 to around 15,460 or 15,470. So that's the resistance point. Anytime that once price is between 15,450 to 15,470, around that zone, you can look out for a sell there and close once you make profits, because that is a verified zone. You understand? So of course, if it breaks, it's a resistance point. So if it breaks, somebody is saying he's seeing the very nice head and shoulders, okay, which is not bad, which is true. But yeah, there is a possibility that it could break the resistance, and that is why, like I explained to us last week and the week before last, the best place you want to enter your market or enter your trade is around support and resistance points, because it is less risky there. You understand? Now, what do I mean? If we take a sell around these zones here, if we take a sell around it, there's a high chance that there will be an initial rejection that will give us profit. But even if it breaks here, okay, let's say for instance, I entered my sell somewhere here, okay, and somebody entered the sell up here. if both of us make loss, let's say price breaks here and we have to close it, I am definitely going to lose less than what that person has lost because of where I entered the market. You understand? So yes, it's very possible that price could break this resistance, but considering the fact that this is a place where price has been rejected in the past and there is really no high impact news till 7 p.m., there's a high chance that if anything that pushes price, the 2:30 session may immediately just push price up. But from this 15,450 to 15,470, from that 15,450 to 15,470, if you take a sell around there, you should be able to make profit to say, oh, I've made 5,000. Oh, I've made 10,000 from this. You understand? So that is what I'm going to advise. Remember that still looking at the 50 EMA, it was verified here and price continued to go up from there. Even if you check it on 1 hour, it was verified on 1 hour. We had 2 consecutive bullish candles above the moving average that pushed price up. So it's just for you to see that it's a strategy that can actually work. You understand? It's just for you to see that it's a strategy that can actually work. You understand? Don't worry about my own trade and about the stop loss. Worry about what I'm telling you. You understand? Okay. So now, let me say something about this verified resistance. For some of us who do not have the indicator, okay, indicator is not a big deal. Some of us are using our phones, and then we'll say, oh, what does that person have on his chart that is writing like this and writing like that? The point is this: it's not really about the indicator, okay? It's about the fact that this is a place where price has been rejected in past. So even with your phone, once you see a particular zone where you have 4 or 5 candles together and they cannot change, or they cannot go above that particular place, they cannot go below that particular place, then places like that are places where you call support or resistance zone. So you don't really need to how will I say it now? You don't really need to be 100% dependent on an indicator that gives support and resistance. It's all about looking at the candlestick patterns. When you have a place where they are rejected, when you have a place where 3-4 candles cannot go above or 3-4 candles cannot go below, that's a problem. You understand? That's a problem. Okay. Please, which day was the original lecture on? Oh man, I think it was last week. Just check, go via YouTube and but I believe that everything we talked about, I have actually broken it down here. So I'm a bit worried that you did not understand with the way I explained it here. But you can check on YouTube. I think last week Wednesday we had something on the EMA. No. What we did last week Wednesday was candlestick pattern. I think it was upper. Okay. So that is that for US 100. Let's even look at it for the sake of so we see there's a small resistance here where it's on 50 minutes where it's done like a double top. Okay, so anything that makes it to push into this zone, you can take advantage of its sell. If it breaks above here, and what does that mean? If your candle can close above this place, then you might not want to close that. It's very possible that price wants to head for that up. So you want to close that sell, and take buy to recover from that loss. You understand? So that's the plan. Now, anything that makes price, if you take your sell, once you're in profit, you can close, you made profit, good. You will now wait for price to interact with the 50-period moving average again. If it comes back to the 50-period moving average and it can give 2 consecutive bearish candles below, you can look out for a sell, okay, to the nearest support. But if it doesn't and instead it gives you 2 consecutive bullish candles above, that means that moving average has rejected it. And it's possible that price is about to head back upwards. You understand? Good. So let's look at GBP USD. Look at GBP USD on daily time frame. GBP USD really sold from last week that we talked, 13th that we talked. GBP USD really sold. I think it was Euro USD I saw that did about 100 pips. But this is GBP USD from 13th. 13th was last week. Good. Let's see how many pips it's giving. I also giving over 100 pips in bearish move. But right now, market seems to be retracing. If you check, this is GBP USD. Market seems to be retracing back to the upside. Okay, I don't expect this retracement to hold on for too long. You know, I don't expect to hold on for too long. This is because market is going to, after the US session market is going to go to some level of quietness because of that 7 p.m. You understand? Market is likely going to go into level of quietness because of that 7 p.m. You understand? GBP US also had 2 consecutive bullish candles above the moving average in this place and this place, and you know, was able to push up. I don't think this was up to, this move is up to 10 pips. Let's see. Okay, up to 10 pips, you know. But if you look at GBP USD on 15 minutes, GBP USD is approaching a proven resistance. So this is what I'm going to advise to trade GBP USD. Is approaching a proven resistance around here. So this will be my advice. Around this proven resistance here, you can actually look out for a sell and, you know, just consider 10 pips. Okay, around this proven resistance here, or around this resistance point here, we expect a kind of rejection or retracement. Okay, so you can consider looking out for a sell on GBP USD if it pushes up to around 1.23950. If it pushes up to around 1.23950, you know, you can look out for a sell from there. If it pushes up to 1.23950, you can look out for a sell from there. Okay, just about 10 pips or thereabout to take advantage of the retracement it will likely do. That's my advice for GBP USD. Except if it breaks, if the body of the candle, by the time the candle closes, if it can close above that 1.23950, if you can close above that place, if it closes around above 9 point, let's say anything that made GBP USD to close at 1.23970, then you can take a buy from there. But I expect that from this place, since this is somewhere that it has been rejected very well, it's very possible that if it gets here, it should do at least some retracement of 10 pips or thereabouts. Okay, that's for GBP USD. For gold, okay, for gold, gold has also tried to recover some of the fall that it has made. Gold actually fell a bit before giving us, remember last week we talked about a hammer. Gold gave a hammer on this support zone and then pushed up from there. But yesterday's candle still gave a bit of worry. You know, it's not a special candlestick pattern, but you know, we're looking at it that, oh, with this candlestick pattern here, do we expect that gold is going to sell, especially towards the late hours of today? That's from that 7 p.m. Okay, so let's look at where gold is. Okay, so gold has been able to push up. Gold even gave 2 consecutive bullish candles above the 50 period EMA. So there is a high chance that we can still expect a push up in gold, at least to this proven resistance. So for gold, I would advise that, you know, can take advantage of a buy from 1933, to around 1935. Okay, 1933 to around 1935. Okay, but that place is a proven resistance. So a buy on gold from 1933 to around 1935. Okay, that's what I would advise on gold. That's what I would advise on gold. Okay, all these places here are kind of, you know, just retracement zones and all that. That for me, that seems like the best place to take advantage of gold. Okay, so from 1933 to 1935 will be my advice for you to buy gold. Okay, 1933 to 1935. Okay, around, especially for that gold, so that around 1933.90 can take advantage of a buy from around 33.90 to take profit at around 1935. Okay. Because it's still giving us that bullish move. Okay, please, where do you say we should look out for a sell on US 100? Okay, let me continue. Most likely I could come back to that, but
We just touched only two things. Euro dollar. What's up, euro dollar? Okay, well, Euro USD is has already approached its own zone, much closer than GBP USD. You know, GBP USD, we're actually expecting a retracement, and then we were considering the closest resistance point. If you check Euro USD around here, we're going to be having like a double top around here for Euro USD. We're going to be having like a double top around this place for Euro USD. So it's possible that from there we can take advantage of a retracement, a sell on Euro USD. Okay, so I'm going to be looking at anything that makes Euro USD buy towards 1.07178. Anything that makes Euro USD buy towards 1.07178, I can look out for a sell from that place. Looking out for like maybe 10 pips. Okay, so anything that makes Euro USD to buy to around 1.07178, 1.07180, around that zone like that, can look out for a sell, you know, a pullback. Okay, that would be my advice on Euro USD. There's a verified support here. There's verified support here. I don't expect that it will get here until maybe that 7 p.m. FOMC data. You understand? There's a resistance here which I feel we could take advantage of. Okay. Let's look at US 30. US 30 has also been going, you know, bullish. Look at US 30 also. You can see that clearly you had two consecutive bullish candles above the 50-period moving average here, and it has been pushing up from there. You understand? Even on 1 hour, if you check US 30 on 1 hour, you've had two consecutive bullish candles above here, and price has been trading bullish. You understand? So it's not just to, you know, wait till maybe 2 o'clock or wait till 8 o'clock. These things are there for you to take advantage of yourself. You understand? Hey, they are there to take advantage of for yourself. You understand? So that's important. That's very important. Okay. For instance, now this particular move was made clear from 8 or 9 a.m. today. 9 a.m. today is when this move was made clear, and then since then, US 30 has been pushing up. You understand? So apart from entry point, please understand it and be able to use it for yourself to enter into the market. Okay, that's my advice. Okay, so but for US 30, we can look at because of this bullish move in the market, can actually look out for a short buy from 34,960 to around 34,990. You know, a short buy from 34,960 to around 34,990. See that this place is a strong resistance zone. It's a strong resistance zone. So if price heads towards that point, I feel like it's possible that price could actually retrace back. Okay, it's possible that price could actually retrace back. So anything that makes, if you take advantage of the buy from 34,960 to 34,990, okay, if you push price towards this resistance point here, anything that makes it to take price to 35,000, 35,020, you know, around that zone, can actually take advantage of a sell. Okay, because that is such a very strong, it's a strong resistance point. You understand? It's a strong resistance point. Okay, we already have no, there will be no, we'll be having a class this evening for newbies. The class will be on technical analysis. That is why we took, if we're going to be having classes now, I would not have taken my time to explain FOMC from 1 o'clock. You understand? So let's still look at other currencies. It's 2:30 already, but let's consider other currencies. It took a lot of time. Took a lot of time. Okay. Let's look at oil. Let's look at oil.
Yep. Okay. So for oil, well, oil has been trying to make her own move also. You know, oil has been trying to make her own move. Um, the last time we looked at oil, it seems like there's even no change in oil, because even here on 15 minutes, oil is still boxed between a verified support and verified resistance. You know, so there's a lot of tight trading in oil. It's quite a number of tight trading in oil. But if you check it on daily time frame, there was an inverted hammer here, and that shows bearish pressure. You know, oil has been buying for a while. So there's a high chance that oil will likely continue selling. If you look at what we had on yesterday's candle closed as an inverted hammer or a shooting star. And so that will still give a lot of bearish pressure to oil. So I feel like oil is likely going to still sell. Okay, oil is likely going to still sell. So right now, oil is making some kind of push up. I will advise that you take a sell actually on oil. I advise that you take advantage of a sell on oil. What I would advise you to do is to take a sell on oil. If you take a sell on oil, you can, maybe set your stop loss at around 93.90. 93.90, 93.95. But I advise that oil should sell. You should look out for a sell on oil back to this verified support at around 92.75 or thereabout. Okay, so my advice for oil is actually a sell. That's my advice for oil. It's a sell. There's US 100. Oh, US 100 didn't even get to our point and it's already selling. It's a lot of bearish, but well, so sorry about that. This is what we'll do. It didn't get to our entry point before selling. So most likely we're not able to take advantage. Continue with which buy. There's no buy on US 100 now, right? It did not continue. So this is what we are going to do for US 100. It did not get to our entry point before selling. You know, sometimes that can be very painful because we're looking at taking a sell if it buys to this verified resistance, but it's sold a bit. Now, this is what we are going to do. Please have your 50-period exponential moving average on your chart. Currently, if you look at my chart right now, US 100 and my 50-period EMA, they are interacting. And so that means that within the next 30 minutes, I should be able to know whether it will give me 2 consecutive bearish candles for me to keep selling or 2 consecutive bullish candles for me to buy. You understand? So what we are doing on US 100 now is, do I have 2 consecutive bullish candles so that I can buy? Or do I have 2 consecutive bearish candles so that I can sell? But anything that pushes US 100 to this verified resistance side, anything that pushes, remember I said it that if you're trading indices, you're trading anything, you should be looking at selling from resistance, right? Good. So anything that makes it to buy towards 15,460, 15,470, you want to look out for a sell from there. But you can see that US 100 is having a very strong bearish pressure right now, okay? Very strong bearish pressure. Which, if I were to advise, my advice would be to sell US 100, okay? GBP USD also has not gotten to where we marked for it. If it gets there, we should be looking out for a sell. Oil seems to be pushing up. Remember, I think we gave stop loss for oil around 93.90, right? Wow. Gold. Oh, that's true. 1933 to 1935. Well done, well done, well done. But for oil is not, we gave a stop loss at around 93.90, right? So if it hits that zone, just hold on. Now, if oil hits, I'm not even sure is anybody that plays that trade, but we still have oil at this verified resistance. So hold on, okay? Let it break this verified resistance before we can say that it's a bad trade. You understand? So we need to hold on. Now, even on oil on 15 minutes, put your 50-period moving average there and monitor it. You understand? Because it's a verified resistance. I still expect that it's going to fall. You understand? I expect oil is going to fall. Now for gold, for those persons who did not take advantage of the buy on gold, gold is currently at a verified resistance right now. For those people who did not take advantage of the buy, let's say you were not able to make profit like the person who made profit on gold buy, it's currently at a verified resistance. So you want to be careful with now. You not say, oh, I didn't enter, let me go and enter now. There's a verified resistance there. Okay, there's a verified resistance there. And so what I am likely expecting from that particular point is that price may likely fall back down because it's a verified resistance. You understand? So the only time I'm going to say, oh, you can now join in on the buy on gold is if it gets to, or if it buys above 1937. 1930. If it buys above 1937, then fine. Okay. But right now, with the fact that it's at this proven resistance, I would not advise you to buy. In fact, I would advise you that you look out for a sell from this current zone on gold. Look out for a sell for this current zone on gold. Okay. But that's my advice for gold. Okay. Buy and sell. US 30 also did not get to where we wanted it to get to before selling. But still, do not forget that US 30, there is a resistance on US 30. I think we gave a buy at 34,960 to 34,990. But there's a resistance around that 35,000. Anything that makes US 30 to get to 35,000, you want to look out for a sell from that point. Do you understand? You want to look out for a sell from that point. Let's look at other instruments. Yes. Now, remember that we said there's a high chance that the dollar is going to sell till that FOMC data comes out. Okay. So let's just hold on. For USD JPY, it's bearish. Market is bearish. Let's see. This is USD JPY on daily time frame. This is USD JPY on daily time frame. And at this daily time frame where USD JPY is now, it's currently like at a resistance. It's at a resistance. So that is why you have the current bearish pressure. Look at 4 hours. 4 hours gave like a shooting star and it's currently confirming it. So there's a high chance that this sell is likely going to continue on USD JPY. Okay, this sell is likely going to continue on USD JPY. Let's look at GBP JPY. Oh, no, that's GBP NZD. GBP JPY, let's check it out. Okay, so GBP JPY, GBP is currently strong against JPY. Let's see, have a lot of range here, just range around here, you know. Let's look at a higher time frame so that we can block the noise. Well, there's a downtrend on GBP JPY. You know, there's a downtrend that just started. I think we looked at this when we were considering trend last week on the currency markets trend. Okay, there's a downtrend that GBP JPY has made. It has made series of lower highs, 1, 2, 3, even 4. Okay, so GBP JPY is on a downtrend. Now, whatever retracement it is doing right now, I would advise that you look out for a sell from around this zone here. You can look out for a sell on GBP JPY once it approaches the high, the most recent high it got to. If it approaches that place, you can look out for a sell from there. So anything that makes GBP JPY to buy to 183.430. Anything that makes GBP JPY, you can even set a sell stop around here. You can set a you can set a sell limit. You can set a sell limit at around 183.430, you know, and target some 10 pips or thereabouts. Okay, because it's on a downtrend, so I should actually expect it to sell further. Okay. AUD USD. The dollar is currently weak. Dollar is weak currently, so you can see how AUD USD is also pushing up. The dollar is weak and everything is in preparation for the data coming out later in the day. So for AUD USD, you can actually look out for a buy. I think if you check it on 1 hour, AUD USD is how many pips away from the current resistance? It's about 30 pips or thereabouts. So I think that you can look out for a buy on AUD USD. You can at least do 10 to 15 pips of a buy on AUD USD. You understand? For GBP JPY, I said at least 10 pips to 15 pips. So you already have your take profit. Okay, so you have your take profit there already. Okay, so let's look at, we didn't look at US 2000. Okay, so we have US 2000 here, approaching a resistance where it has made like a double top, or where it's likely to make a double top at that point there. You know, this place where it is approaching is a resistance point. So for US 2000 also, so that everything is gaining strength against the dollar, but they are all approaching their resistance point. Everything is gaining strength against the dollar, but they are doing that towards their resistance point. So for US 2000, as it's buying right now, want to hold on to maybe around 1862. From 1862, you know, you want to take, if it breaks above 1862, this is it here, let me mark the place. If it breaks above 1862, then we can actually continue to buy to the verified resistance that is at 1868. So if it breaks above 1862, we can buy. But I would advise that we look at from that 1862. I advise that we look at, we can scalp some sales from there. It's like a resistance point. So the small retracement should give us profit from there. But right now, if you want to place a trade right now, US 2000 is pushing up. So you can at least buy from now to that 1862 or thereabout. If it breaks above that place, then we can continue the buy to 1867 or thereabout. Okay. Yes, somebody made a very, very good. I like when points like this are raised, you know, because we talked about the RSI the last time, and somebody actually dropped it now on the chat that the AUD USD is likely showing an overbought on RSI. Thank you very, very much for that. Let's look into that. Because as long as the dollar is weak, all these guys would always take advantage of it. So yes, the AUD USD is showing on 1 hour that we just checked, even on 4 hours, is actually showing that there is a weakness. So remember, the time we took this analysis like this, we said that, so if you're on a buy on AUD USD, it's fine. You can just look out for some 10 pips. I still expect personally because the closest resistance is around here. Now, remember, I said something to us. I said that once you are using the RSI and you see that price overbought or thereabout, the best thing you want to do is to wait for price to get to the closest resistance, and you likely want to sell from there. So with this important information that we've just been given now, it means that the best thing some people will likely want to place a sell limit around this verified resistance here. You can be buying AUD USD now, it's fine, it's overbought, but it's approaching the nearest resistance. From that resistance, it would likely push back down. Okay, so if you're not on the buy on AUD USD, you can even wait to take a sell at around 0.65120. 0.65120. From there, there's a high chance that to sell. So AUD USD will likely buy to that place. It will take all the time between now and 7 p.m. or thereabout to buy to that place, and from there to likely now fall. You understand? Because even the dollar index is falling. Dollar index is currently falling. So you can still take advantage of a buy on AUD USD to that point. You understand? The person who entered the buy on US 100, you know, with the way dollar is weak now, I don't even know. I don't think that is, you know, I don't think that is a terrible decision that you have made to buy. Remember, I said for US 100 that we could use the 50 EMA to decide what to do. You understand? But with the whole sell that he did and the whole rejection he's doing, US 100 is currently very erratic. That is why I gave a resistance point to hold on to. I said for US 100 around 15,470, you can look out for a sell from there and make profit from that point, because that's around a verified resistance. But if you're on a buy on US 100, I feel like with the way it has rejected, that buy is fine. I feel like right now, if you want to trade US 100, you can be scalping buy. You know, if you're a scalper, you can enter a quick buy, closing profit, enter a quick buy, closing profit. Okay. US 100 is, yeah, it's actually buying. So the buy is fine. But once it gets to 15,470, I feel like it would be a good place to actually look out for a sell from. You understand? For GBP USD, we already have it around that point. I said that if it is around this 1.24, this thing, look out for a sell. You take profit of around 10 pips. Okay. And it's already in play. Okay. It's already in play. Wow. Gold has gone crazy, guys. Gold has pushed up. Everybody is taking advantage of this weakness in dollar. Everybody is taking advantage of this weakness in dollar right now. If person asking for TP for JPY, for profit, I said 10 pips. So look at where you have entered, calculate 10 pips or 15 pips, and that will be your take profit. Euro UST is around that point where I gave, where you want to look out for some 10 pips on a sell. If it gets to 1.07180 or thereabout, you want to take advantage of a sell, look out for at least 10 pips. Okay, look out for at least 10 pips. Okay. Yeah, I think so far so good. From gold, from especially gold. I think gold was the one that was actually active to give profit today. You understand? So for the rest, do not forget, let me reiterate what I said for FOMC coming up later today. FOMC will be coming up by 7 p.m. today. So if, let me share it with us, if the data comes out by 7 p.m. and it comes out higher than 5.5%, dollar is going to be on a massive strength. If it comes out the same, I would advise you just wait till 7:30. That is a press conference. Okay, but there's a high chance that this data likely gives strength to the dollar. We cannot be sure, so wait till that time. If the data comes out and is higher than 5.5%, trust me, there's a high chance that it's going to give a lot of strength to the dollar. Okay, but whatever it does, it will likely give a longer direction to the market for the rest of this month or even into next month. You understand? So please do not miss it. Okay, do not miss it. Do not miss FOMC by 7 p.m. today. It's a very strong impact. If you miss it, by the time you wake up tomorrow and check your chart, you will be very disappointed because it usually moves very well. And this one will likely move a lot. You understand? So please don't miss it. So the data is from 7 p.m. and 7:30 p.m. also. Okay, 7 p.m. and 7:30 p.m. also. So don't miss that. It will hold 7 p.m. and then by 7:30 p.m. there's going to be the press conference. That 7:30 p.m. the move of 7:30 p.m. might likely continue for the rest of the day. Then for NZD/USD by 11:45, NZD/USD by 11:45 they'll be releasing their GDP data. So we expect it to be good for GDP. We expect it to be good for GDP. So if it comes out and it is equal to 0.4 or higher than 0.4%, there's a high chance that NZD is going to be very strong, especially NZD JPY. So something like NZD JPY will be bullish. Something like NZD CAD will be bullish. Something like GBP NZD will be bearish. You understand? So let's look out for those data. Then somebody said, how can we set pending order for FOMC? We already treated that. Try and come early for this meeting so that you don't like use the word stress or weary the instructor. How to set pending order? I believe you know how to set buy stop, sell stop. The best thing you want to do around that time is whatever pending order you're setting, make sure they're not too close. Make sure your buy stop is not too close from your sell stop. Okay, and that thing is that it will be best if you can use trailing stop. It will be best if you can use trailing stop. Okay, and then trailing stop is used when you have placed your pending order. Just right click on the order, you see trailing stop. But it makes sense, it makes more sense if you are using trailing stop. Does not work on mobile. It doesn't work on mobile, so it's on your system and you have to be online. You have to be online. If you place trailing stop and you go offline, you may have issues. So you have to actually be online so that it can activate, okay, and work well. Yes, NZD/USD at 11:45. You can see it on your screen now. Am I not sharing my? You can see it on your screen. What is he asking? Yes, by 11:45, there's a high impact news on NZD. You understand? So please, I'm just trying to tell you there's a high impact news, for NZD, and it's their GDP. is our GDP. We are actually expecting the data to be very good, because the last time the data came out, we got it at minus 0.1% from here. You can see it here, minus 0.1%. And right now, what we are expecting is that it should be at 0.4%. That's a lot of progress, you understand? So if the data comes out higher than 0.4 or equal to 0.4, NZD is going to be very strong, especially against something like JPY, against CAD, and against GBP. Okay, so you want to look out for those guys. So this is where we will draw the curtain. Please, I want to encourage us to not forget 7:30 today, 7:30 to 7 p.m. to 7:30 today. Please don't forget. Another thing is that for this same list link takes us to the morning meetings. This link takes us to morning meetings and the afternoon sessions. Tomorrow, our afternoon session is going to be by 1 p.m. We're going to start our afternoon session by 1 p.m. tomorrow, because we'll consider indices market mastery tomorrow by 1 p.m. So you can join with this same link. Okay, I expect that some of us are already on this. We gave it, so the sell on GBP US is already active. And if you took it, you should already be on be in profit. You understand? Should already be in profit. Okay. So yeah, that is that. Thank you all for your time. I wish us a profitable day, especially trading FOMC. We will connect tomorrow once again by 8 a.m. Okay. For those people who want to go through all we have done today, we dropped the link to our Zoom meeting. I'm going to drop it again. I'm going to drop the link to our sorry, I said Zoom, our YouTube channel. You understand? Our YouTube channel. So I'm going to drop it. You can check us up on YouTube. We have those contents there, like, subscribe, share, whatever. Okay. Yeah, I dropped it for everybody, so you can access it. Just once you click on this link now, just take it straight to YouTube. You understand? So you don't have any problem. Okay. Yes, my number. It's not as if I don't see this. It's not as if I don't see the messages asking for my number. I do, and I'm really grateful that, it's just that sometimes it can be very hectic. So I'm really thinking about it. That should I drop my number? I don't want to disappoint anybody in terms of taking calls, because it can be crazy. But I'm going to drop my number. I'll drop it, and you can chat me up on WhatsApp. That will be much better. And just chat me up on WhatsApp. I'll respond to you as soon as possible. Okay. So there you have it. That is the number of the small boy. Okay. So you can reach me on WhatsApp, please. I would prefer for you to reach me on WhatsApp. So don't forget 8 a.m. tomorrow, we'll have this session, we'll have the morning session, and then 1 p.m. we'll be here for the afternoon session. Okay. Thank you all for your time. Enjoy the rest of your day. Have a very profitable trading day. Bye for now.